Bismillah, welcome back to Trade and Wait, where we are going to review today's price action, utilizing ICT concepts. Let's get into it. But first, please like, comment, and subscribe. And we want to always keep in mind a more balanced approach to our decision making. This is why I consistently highlight the 6 Thinking Hats by Eddie DeBono. Help improve your decision making skills, especially as it relates to trading, as well as other aspects of your life. And specifically trading related, the 7 fundamentals of one good trade. We have a quote today. I was tripping up over this word, so I'm gonna try to avoid it. Don't judge me. Anyway, good traders tend to be hardworking and shrewd people open to new ideals. The goal of a good trader, paradoxically, is not to make money. His goal is to trade well. If he trades right, money follows almost as an afterthought. Successful traders keep honing their skills as they try to reach their personal best. And I think this is a good trader. A good trader's job is not to make money. His goal is to trade well. And if he trades right, money follows almost as an afterthought, right? It's the process. And again, for this week, as well as the rest of the month, and potentially for this quarter, my main goal that I'm focusing on improving is to reduce the amount of impulsive trades that I take. And I defined impulsive trades as trades that do not have a trading plan, or trades that are executed deviating at least partially or in whole from the trading plan. And honestly, what I'm realizing that is these weekly reviews actually help. Right, the market opens or whatever time frame or whatever time, not necessarily time frame, but time frame as well. That's based on your trader identity. If I'm planning on scalping, then I'm looking at maybe definitely the levels on the 4-hour, but I'm looking at the 15-minute in relationship to those levels. If I'm looking to scalp real fast, it's not even fast. It's this level to that level. And it may take some time because it's time then price. That's the criteria. Yeah. So what I'm realizing is that yes, these reviews are like reviewing price action the day before, as well as on the weekend for a weekly review, and reviewing it the night before. It kind of sets you up for the next day, right? Kind of sets you up for the next day to go, okay, because you already are familiar with levels, significant high time frame levels, and you should be aware of any type of economic news or high impact news that may come out. In today's case, it was core PPI at 8:30. So this is where we are currently. This is today, right? This is the weekly candle currently in. These levels technically shouldn't be on this time frame, but obviously they are. I think those are 15-minute levels. Not sure, but come off. All right, so we have this inverted fair value gap that we've been highlighting, and this level is not on this time frame. It's actually, I think that's a 4-hour level, order block, I believe. And I'm actually not even sure what this line is. Oh, 50%. All right, that's one of the things we were highlighting, equilibrium of the price range. The price traded down here. We were talking yesterday that this possibly could be an order block, but I myself, I would prefer if price could convinced me that it was going to trade above this inverted fair value gap and then trade higher, targeting this swing high. However, I'm looking for price to trade down into here because I like optimal trade entries. Like, but from here to here is also like a discount, right? So you can do that too. But yeah, we'll need to like hold above this inverted fair value gap, or at least consequent encroachment on a lower time frame, of course, because it won't really. If it does trade up here, and obviously the week, this candle is still forming until the end of the week, so you won't really know unless you go down to a lower time frame to analyze what is price doing around the consequent encroachment of this inverted fair value gap, and consequently what it's doing at the high of that inverted fair value gap. Like, aka, is it going to be a reclaimed fair value gap? But again, personally, I would like price to trade back down into this level at a minimum. The minimum, trade back down into here. But that's just me. Everybody have their opinion, their bias. And if you could justify it, then such is life, right? All right, so that's the weekly. Back to the 4 hour. Oh, sorry about that. This 4 hour here, and this would be the 15-minute. All right, so we discussed these levels yesterday. This is the weekly level. This is a weekly level as well, and this is this 4 hour. 4 hour fair value gap and order block. It's this green line. So we have that. And this is new. Oh, actually, I think I dropped that down too far. That's these two levels. How can I get you back? Okay, let's just okay. I'm tired. I'm sleepy. I'm gonna try to get through this, but I know if I try to like rush it, I'm gonna make like some type of error, right? So be patient with me. All right, so this, right, you have this 4 hour fair value gap. You don't need this, so you don't need this really. It's now you have new market structure, but it's still relevant, as you can see. So we have this bearish fair value gap, this sell side imbalance, buy side inefficiency. It's in balance. Using this candle's low and this candle's high, and you can see how price is reacting to that level. And you have this bearish fair value gap, and I think all right, that's accurate. And I eyeballed the consequent encroachment, so let's see if we can fine tune that now. It'll go off, right? Oh, that's better. All right, and so yeah, these are the 4 hour levels. This inverted fair value gap, this bearish fair value gap, and this now is an inverted fair value gap because price ran above it. If you don't like inverted fair value gaps or violated fair value gaps, in this case a violated bearish fair value gap, once this happened and pull back down, this is the inverted fair value gap. Much like order blocks, inverted fair value gaps, one of the highlights of an inverted fair value gap is that it signifies a change in the state of delivery. So if price got held up here, then it should have, once it traded back into here, technically it'd be expected of it to trade back lower, but it didn't. It violated it. So the moment it trades back into it, we can expect some type of upward movement. And likewise, this is an order block. and just using the body so you can see a reaction there as well. So you technically don't need it all, but if you do have it in your arsenal and it's something that you pay attention to, then it's helpful, right? This is that inverted fair value gap from yesterday, from like last week, the one we highlighted yesterday, and it's technically still relevant. So it's a reclaimed bullish fair value gap. It's relevant here, relevant all over here, violated here to the downside, reclaimed here, traded back through it, reclaimed again, and traded here for optimal trade entry long. Didn't reach back up to the high, but it's still a good trade. Likewise, this is an order block here. You can highlight that. So you can see pushing higher, and the bodies of the candle have more volume, or the bulk of the volume. So you can see here that price traded through the bodies of the candle. So that's a target. Ideally using like OT entry, depending on if you're using the bodies or the wicks. In this case, you would naturally probably target the swing high. It failed, right? But it took out the highest body, right? But also it traded back into this 15-minute bearish fair value gap. You can see that it was relevant here, relevant here, relevant here. One trade I wanted to highlight is this one that kind of happened here at 5:45 prior to the news at 8:30. So that was actually tradable. And probably if you were looking at like kill zones and the likes, you probably wouldn't have taken this trade. Anyway, so we have a run on stops. We have a run on the previous day's high. Is that valid? Yep. Previous day's high is here. PDH stands for previous day's high. So price ran above the previous day's high here with this candle. Pull back. So moment price traded below here was a market structure shift. And what's the rules, right? Run on stops. Rule number one, run on stops. I'm not going to type it because I'm trying to get through this. Rule number one for A+ setup here is run on buy stops or sell stops. Run on stops. A break followed by a break in market structure, right? And a retracement into an inefficiency above at least at a minimum 50% of the range of the price leg that caused the market structure shift. Those are the three rules, and additional rules consist of stop loss placement or protective stop placement, as well as targeting. And you can see here, this is a market maker. Not sure if you can see it, but I see it. Market maker sell model. Trading below these lows, it's relatively equal lows here. Pull back into this 15-minute bullish or bearish, apologies, I'm looking right at it and saying the wrong thing. Bearish fair value gap. This is eyeballing it. It's definitely stayed above consequent encroachment of this bearish fair value gap, and continue down, taking out this low, relatively equal lows again, and trading through the new day opening gap, I believe this is. Traded through it. It's a good trade. News hit, rally back up, ran this high. You have 1, 2, 3. You have a 3 drives pattern, which is a reversal pattern. And it pulled back inside the range. But let's get back over here. Get back over here. You kind of had this break, market structure shift here, and the retracement. And let's see, is that we did note something additionally regarding these long wicks, as well long wicks and optimal trade entries. But All right, so this meets the criteria of an A+ trade setup. It's not an OTE utilizing this big gigantic wick, but we did discuss you can make rules for if there's a wick. That's what we found, right? If this is long wicks, then very often price doesn't trade into an optimal trade entry. In this case, you may want to consider utilizing the body, the highest body. And now we have a wonderful entry. If you wanted to tighten it all the way up, then you still have, right, that's utilizing the lowest body here, highest body here. Optimal trade entry is still glorious entry. And first stop out would be, if you think here was the target, then that's 2 standard deviations. If you continue down through the new day opening gap, and you got 3 standard deviations. If you weathered the pullback into this inverted fair value gap. Now, I was actually looking at, I saw this and I'm like, okay, one thing that I considered was, excuse me. All right, one thing that I considered was the possibility of price violating this and inverted price violating this bearish fair value gap. However, I did note that we had a bearish breaker here. Bearish breaker is right here. You got a high, a low, and a higher high. This is a breaker. So, a bomb, right? Yeah, like purple, blue, whatever. I'm gonna delete that because it's just too crazy right now. Too much noise. So you have this breaker here. You have the entire breaker block. And what I tend to do again is just utilize the, so that's the body. And you can see here, let's see what those numbers look like. That's the opening of this candle. And we're gonna see what the high is on this candle here. All right, so precision is cute when you got like this level of precision, but it's not necessarily necessary for profitability. But there you have it, right? That was crystal, right? So they're targeting this low again, right? So where were we? All right, so you had this breaker here, this bearish fair value gap. So you had confluence and nesting effect of PD arrays, in this case a bearish breaker and a bearish fair value gap to continue lower for standard deviations. That's one setup, and that will put us at 8:15, 8:30. After reaching this objective, price ran back up, and honestly, right? So Sellside was taken out already. Sellside was taken out. So you have to think about Buyside taken out, right? But I was actually considering price trading back up and trading into this, which it did, right? But this is what I was watching here. 8:30. Price trading back up, and it ran the intraday high, the London high. That's actually why I highlighted this here. So, and I consider this to be a protected high because it just ran buy side and it's inside of this 4-hour bearish fair value gap. So I believe I entered like here at the high here. It's kind of like entered and that's accepted that this is what it is, right? I didn't go below the 15-minute time frame though. Stayed here, shorted Did I get out? Did I get out? I got out before. Yeah, I got out once price took this low out. Exited the trade here. But you can see price traded down into here, into this, because this was a bearish fair value gap, like we discussed. Then it's violated, traded back in as an inverted fair value gap here. Traded back up, and I'm looking at the 4-hour inverted fair value gap. Is this the weekly? Apologies. This is the weekly fair value gap, inverted fair value gap. Let's go back. That's the right. So this is that in weekly inverted fair value gap. So I was looking here that, oh, the wicks are stabbing through, but the bodies of the candles are staying inside of this range and staying inside of this weekly inverted fair value gap. So additionally, another thing I was looking at was, is price going to hold above the previous day's high? That was another concern. But this staying inside of this weekly inverted fair value gap, the body staying inside, was confirmation. And the moment it traded down and traded back up into this previous day's high and couldn't hold above it, gave me more conviction that price was going to seek sell side liquidity. And it pretty much just traded back down into this order block or this inverted fair value gap from the 4-hour. So we had a short, boom. We had a short. This is one model, one market maker model. This is another market maker model. Traded into this. You did the 15-minute, traded into this fair value gap. And you can see just eyeballing it, it is respected quite nicely. So those are the number of trades there. And the levels. I'm gonna take this off because as we see it. What else is there? Yeah, so you see like a lot of opportunities. So one of the characteristics of the lunch hour, 12, technically it could be 11 to 1 or 12 to 1 or 11 to 1 or yeah. It could be 2 hours or it could be an hour, however you want to cut it. It's up to you, right? So one of the characteristics of the lunch hour is consolidation or a pullback. And we have that here. And all of this is good. Like the levels are being respected. It's like really, it's just really up to you to be patient and wait for your trade setup. And if you don't see it, then you shouldn't. If you don't see it, then you shouldn't entertain it. So you kind of see it here. Hopefully, previous day's high. So it wasn't hold a retest here, if you want to call it that. Trading inside of this bearish fair value gap or inverted fair value gap. So reclaim bearish fair value gap. And you can see here back into this 4-hour this 4-hour inverted fair value gap. Anyway, I think that's all. You see, let's see here. Let's see here, right? Let's see. So you have a run on stops. And again, you have all of this happening. I use this again to go short, right? And then these same levels, this same 4-hour level or order block here, you use that to go long. However, so you have a run on stops. What's the program? Run on stops. This low being broken is your break-in market structure. That's here. Retrace into an imbalance or inefficiency. You can use here, or you can use the same imbalance that we highlighted earlier. Make that like big and black, right? So yeah, price trading back into here, short. But if you miss that one, you still have uh, this break in market structure. This is much more significant. And you have a pullback into this range and a drop, holding above these levels here. Mm. So yeah, it's a nice. Anyway, I'm tired. I'm done, man. Please like, comment, subscribe. Ask any questions you have, any type of clarification you're looking for. And then, so I told you guys my favorite time frame was the 4 hour and the 15 minute. It used to be the 5 minute. However, 15 minute has become like my trading time frame. It's like once I know ICT says the 15-minute chart removes the blur, right? Removes the, but once you see it on the 15-minute, you can execute from here. You can execute from here. And again, these days, checking for impulsive trades, like trying to actively reduce the likelihood of an impulsive trade helps, because now I'm paying more attention to the setup. Like, is this my entry? Is it not? And then it's also that, hey, do I accept my trading model? Do I respect it enough that I can respect my stop loss placement? Did I actually think in terms of R and risk the appropriate amount per trade, right? And then also, what are my targets? So it's like, oh, I can get the same number, right? If I was thinking in terms of P&L, which I don't agree with, as Alexander Elder said here, a good trader, his job is not to make money. His goal is to trade well, and that money follows almost as an afterthought, because you have to follow the rules, the process that will enable you to reach that next level, to get that desired income, or level of success that you want. And it looks like today, like, price is back inside, currently right inside of this gap from this new day opening gap, right? Interesting. But it's also inside the same major range from yesterday. And it's interesting. I don't know which one is more relevant than the other, because I personally don't. It's a gap. It deserves attention, but I really don't do new day opening gaps. I do see the significance of it, but I do kind of just use the Asia range, lows and high, and kind of determine, hey, where's price going, right? So you had to run on the Asia low here. You had to run on the Asia high back here, right? It was already ran. So you got to run on the Asia high here, run on the Asia low, run on the London high. But I just want to talk in terms of the Asia high, Asia low. So you had to, like, this type of bam, 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 right? This type of take you out, and I'm going to take you out. Then I'm going to take you out again. And then I'm going to take you out again. Then I'm going to return back inside your range, like, multiple times. Like, no, that's how I see it. It's not something that I pay much. I'm not going to be like, bam, bam, bam. Like, oh, I'm targeting but yeah, you can see the relevance of this zone here. Like, it broke above it, traded back inside of it, broke below it, back inside, above it, back inside again. Just kind of eyeballing it. broke below, then back inside that same range again. Anyway, so yeah, you have pretty fun. All right, thanks for listening. Please like, comment, subscribe, and for all a good night.